Hey everybody, Josh Harrison of World Alternative Media here, and look, the gold price has been pushing that resistance around $1,420 and $1,400 for a couple weeks now, and it's been a magnificent sight to behold. We know what's been happening with the slow incremental push towards a bear market in the dollar, and then I'm talking about pushing down interest rates, and that triggered this huge rally among cryptocurrencies as well. And you could see the 60-day gold price in USD per ounce here, and you just see this little momentum upwards around the 23rd, downwards, and then boom, up on around June 1st, all the way up to June 7th. And struggling a bit, and all the way up to the 6-year high that we saw recently. And it's huge news for gold bugs out there, because gold has been, kind of underperforming to say the least for a long time. Silver being really bad. I should actually look at silver performance in USD today. Amount went up 6 cents and 0.42% as well. But anyway, and I record this on July 13th, 2019. But I wanted to go into this article here that says, will history repeat itself in the gold market? Because we've seen this before. As the article goes into, Mark Twain once said, history doesn't repeat itself, but it often rhymes. Since President Nixon removed the gold standard in the early 1970s, gold has seen several significant rallies, all of which have similar wave characteristics. Gold rallies seem to rhyme. The first two price rallies began in 1971 and 1977, during and after the delinking of the US dollar from gold. The most recent price rally has its seeds in the dot-com bubble in the early 2000s. The chart below shows two long-term monthly gold rallies, with the second rally appearing to be an amplified but similar version of the first. I have overlaid Fibonacci sequence numbers to demonstrate how the price of gold has spiked upwards in expanding fractal waves during these prior surges. And this is interesting insight indeed. And you can see the chart there. As it continues, in the 1970s, gold traveled through 4 Fibonacci levels by this measure in less than a decade after the removal of the gold standard, from 2000 through 2012, amid the dot-com and housing bubbles. Gold also traveled through 4 Fibonacci levels on the way to $1,900. If history rhymes again, and I believe it will, then the price of gold will again spike upward through 3 or 4 Fibonacci extensions to the upside, but then retrace 50% to 70% of that upward move. If so, then the next upward spike could peak in the range between $7,000 and $11,000 per ounce. Investors tend to make rash decisions based on fear and greed. These emotions are typically amplified during times of financial stress. It is during such times that gold solicits fear and greed motivated buyers. During a crisis, fear investors will rotate into gold to hold value, and greed investors see the upward momentum and jump on the train. The upward momentum of the next gold rally might feel like Bitcoin's surge in 2017. Can you imagine that in gold? A long time waiting, as it says, striking out in the 1980s. And as it continues, in baseball, it's 3 strikes and you're out. After the 1970s surge and blow off top in 1980, gold failed 3 key technical tests. After these failures, the gold markets floundered for another decade. Let's take a closer look at those 3 technical failures. And as he puts up on the screen here, interesting chart. And first of all, I want to thank Eric Litikainen of realinvestmentadvice.com for this article. Very interesting analysis here. And you can see those technical levels. And as it continues here, it says, first, in early 1983, gold failed to retake and hold the psychologically important $500 an ounce price level. The rejection resulted in sideways to lower movement for another year before gold failed again, breaking below its upward trend line near $360 an ounce. After falling to a low in early 1985, gold moved higher over the next 3 years, only to fail a third key resistance test near $500 an ounce in late 1987. After striking out in the 1980s, gold fell throughout the next decade back to $250 an ounce. Current technical structure is bullish. As it continues, unlike the gold bear market of the 1980s, gold has been passing periodic tests of support and resistance since its sharp decline in 2013. Gold's price retracement from a high above $1,900 to a low near $1,040 kept the price above a 61.8% Fibonacci retracement level, as well as a psychologically important $1,000 per ounce level. The monthly wave structure of gold is bullish, and the price is now trading above key resistance levels with solid support at $1,379 and $1,250. Even if the price of gold falls back to support at $1,250 per ounce, the long-term technical picture remains bullish. I view the recent breakout over $1,380 to be significant and has likely opened the door towards the $1,580 resistance area. So very interesting here. Yeah, I haven't completely put. I've thought of it in terms of what we saw in the 1970s and 80s before, and then 2000 to 2012. But he's laying it out in an interesting way here. To the downside as it continues, technical breakdowns below 1,250 could lead the way to $1,211 and $1,043. If history does indeed rhyme, a breakdown below $1,043 could lead to another decade of futility. Oh no. This downside scenario does not appear likely, especially not with the uber accommodative interest rate policies worldwide. High US dollar interest rates broke the back of the gold rally in the 1980s, and there does not appear to be any such risk of this happening again anytime soon. Well, I don't know. We'll see. Short-term indicator. In addition to my longer-term view on gold, I also track shorter-term price signals to locate areas of accumulation and or hedging. An indicator I developed shows a mean reversion relationship between price and the point of neutral delta in the options market. Essentially, the point of neutral delta shows where the options market participants have placed their bets and hedges. At the moment, neutral delta is near $1,345 per ounce for the options, which explore on July 25th. And I want to break back to the price here, and just something that I find very significant about all of this. It's a rally up you see here, and then 2011 into 2012, and this push downwards. And look, I think a lot of that has to actually do with an artificial bear market that's been created by debt and the propping up of an old guard system and the stock market, the dollar, etc. I think a lot of it has to do with the fact that we have banking systems that encourage the spoofing of markets. Deutsche Bank was caught red-handed, UBS, BNP Paribas, and all these other major banks, BMO, all these banks were caught up in rigging of gold and silver markets. It's no doubt that they do it because it's hard to get money out of an investment when you're sitting sideways. I think a lot of that has to do with the fact that gold and silver have been historic wealth insurance. Historically, people have used it to insure their wealth against the inevitable dollar crises that we see over and over and over again throughout history, because all fiat currencies eventually revert to their true value of zero, always have, always will, going back to 1024 AD in China. By the way, China buying up lots of gold. Interestingly enough, as we talked with David Morgan recently, the silver guru himself, he was talking about how gold ownership for the first time in a long time is 50-50 private ownership versus government and bank ownership. So it's actually going in a good direction. People are buying it up at a faster rate, and of course the good guys and the bad guys are going to buy the right thing, right? I mean, the bad guys know what's going to happen, and they're going to buy up and they know what's coming in the near future, while still pretending to be bullish on the dollar and the markets and all that kind of stuff. 27,000 Dow or whatever. It's ridiculous. But we should probably do as they're doing and not as they're saying. That's always been my case, or how I view that situation. But again, gold and silver, I believe, to be more wealth insurances than anything, more than any kind of investment. I don't think that it's, this is my opinion, by the way, completely, but I just, you can invest in it, but you could also invest in fiat. I don't suggest it. Gold and silver, you can make a lot of fiat in, but most of all, purchasing power. And that's the major factor that plays into it, is having more purchasing power. And I think gold and silver give people an option to do that, as well as properly decentralized, fundamentally useful, scarce application use demand oriented cryptocurrencies and blockchain infrastructure technology. But anyway, that's another story. So, and now people are going to say, well, you can't eat gold. Well, no, you can. You can't eat gold. Well, technically you can, but you shouldn't. I wouldn't suggest it. So, yeah, that's because, that's just one factor that plays into self-sustainability, and financial sustainability is very important to owning yourself and owning your own life and not being controlled. But also, I think it's very important that people understand that you have to prepare yourself in ways of food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, as I always say. And then gold and silver and stuff like that. But responsibility is key. Self-sustainability is key. Individual responsibility is freedom. Freedom is responsibility, vice versa, over and over again, back and forth. You could go on. So I think that's very important, and people have to stop looking at it as just one thing or another. If you own only gold and silver, as our friend Leo Gans recently told us here at WAM, if you own only gold and silver, that's almost as bad as owning no gold and silver. You need diversification of your assets and your portfolio and all that kind of stuff in ensuring your wealth. And not everyone's going to take gold. You can't just assume that the market is going to decide everyone's going to take gold in these modern ages when you have cryptocurrencies and stuff like that. So you need to have that diversification, and it's important to be prepared in that way. Look, governments and banks depend on the dependence of the populace, which is in debt, which is forced into debt via these usury legal tender laws enforced by social contract that you never sign. They push you into debt, then you have to pay off the interest on the debt, and it creates a vast network of problems that leads all the way up to the top. Populace in debt is a populace in servitude. If they shove you down a bottomless pit of debt, you're forced to ask for a ladder up from the government and the banking system, pushing you into perfect servitude to them. So never forget that, folks. Understand that there are many ways to protect yourself, but you have to first of all be responsible, a free, responsible individual who makes your own choices, decentralize everything, rule yourself, stop fearing the state, and start disobeying, and start working on ways to protect yourself, your family for the future when this oligarch system goes down and the new rises up from the ashes like a phoenix. I think that we are well on our way to that future society. We just have to stay the course, understand money. If you don't understand money, the people who print the money have control over you, because you can't control your own wealth. Don't allow that to happen for yourself or your family. Money is made to seem boring, but it's not really boring. It's just made that way so that, it scares people away from trying to understand one of the most important, vital lessons in life, understanding money and being responsible with money. So, anyway, will we see a massive rally for gold? It's more likely we will than we won't. I don't put dates on anything. I don't put dates on the crash that's inevitable, because the fundamentals aren't on the table anymore because of the level of manipulation. But also, I should mention, with Deutsche Bank in trouble and all these other places in trouble, as they go down, what do you think is going to happen to the markets that they've been holding down like a beach ball underwater for so long? Well, you know how pressure works, right? Underwater. We're going to see a big bounce up into the air, and then a dip followed by another bounce. You know how markets work. I don't have to explain that to all of you guys, but nonetheless, we're going to see a rally upward when that system goes down, and historically we always have, and it's always done people well, except for one case in Greece, but that was due to the government controlling it. And by the way, I should add at the end here that what we're looking for is not a government-controlled legal tender system gold standard, because they'll just print out more IOUs and they have gold, and then the same will happen over and over again. And it's not likely they'll do that anyway, because they're going into a digital future these days. So just keep that in mind. Prepare yourself, be ready, and always be smart. And there's more solutions out there than there are problems. Anyway, Thanks for joining us, everyone, and until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here at WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we're so heavily demonetized and censored and shadow banned. It's getting really bad, folks. If everyone just gave $1 single a month to, say, Patreon or our Subscribestar, where we do subscriber-only content, we could really get out of this rut that we are currently in as YouTube tries to stifle independent media and prop up the mainstream media. This is really important. This is one of the most important times in independent media history for us to say it's now or never. Let's keep moving forward and let's be that change that we wish to see in the world. Of course, there's also our Bitcoin address below as well as on the screen for you to scan if you please. And of course, we got events coming up. So make sure to check us out at AnarchoVegas.com. AnarchoVegas.com. Use promo code WAM, that's WAM, for a 10% discount on your tickets. It's on July 19th, 20th, and 21st in, of course, Las Vegas, Nevada. That's AnarchoVegas.com. Make sure to check us out there and find us on websites like BitTube and Minds, and just try to support independent media, if not myself, any of the other big independent medias out there, to help us continuously bring our message to you free of charge so that we can really change the guard as we move forward into a dramatically polarized, crazy future. Let's try to make it as sustainable as possible. It comes down to you guys. You are the change you wish to see. You guys will help us get through these tough times. So anyway, check out all those links. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.